Analysis of commodity block of currencies for the date of 12th of July 2018 from the part of FutureTrend channel. So, you know the reaction of the market to yesterday's slightly higher than expected producer price index of the United States. The market reacted to these numbers really very strong. That's despite of the fact that probably the first kind of news at the moment is a United States trade policy and current imposing of new United States tariffs against Chinese goods that's importing to the United States. Overall, we still suggest that this topic, this theme of United States trade wars should remain probably most sensitive for the foreign exchange market at the moment, and probably the number one should remain at the headlines as we suggest. And from that point of view, we should look through the analysis of commodity currencies. We should understand that, for example, Australian economy has really very close ties with Chinese economy. Also implies, by the way, for the New Zealand dollar. As regarding the dollar Canada, you could see the reaction of the market to yesterday's Bank of Canada interest rate rise. At first, the market reacted rather positively, and the dollar Canada dipped. Let's see the chart of the dollar Canada. The dollar Canada dipped to the lows of 13.65, where, by the way, lies its current uptrend line. Anyway, after that, the reaction was shadowed by United States producer price index, which came slightly above expectations by 0.1%, and finally we saw the dollar Canada above 132. Really very strange reaction, because we know that producer price index is not a kind of number one index for the United States inflation, and from that from that respect we should pay attention on today's United States consumer price inflation, which we suggest should be much more important for the future of decisions of the Federal Open Market Committee regarding its future monetary policy, future interest rate increases, and we should concentrate our attention on today's numbers, of course. Anyway, any kind of news of retaliation measures from China against last kind of decision of United States President and administration to impose new tariffs on China, on Chinese goods imported to the United States. Of course, this should affect world financial markets negatively from the point of view of risk aversion, and sooner or later should affect such kind of currencies like Japanese yen, but only in case of full-blown trade wars, because we should understand that the market is really very relaxed about this kind of topic, about this kind of event. As regarding some other currencies of the commodity block of currencies, you could see that overall the situation should remain more or less stable for such kind of currencies like Aussie and New Zealand. That's why we suggest to buy on a possible dips to current lows of 2018 in both currencies. At the same time, and we'd like to present you for example the charts for the Kiwi dollar, we should understand that current downtrend located around 75.50. That's why we will use an opportunity of retest of this trend line to enter new short positions in the currency, and the same applies, by the way, for the New Zealand dollar. That's why we are ready to sell the currency at 68.90, because here lies current downtrend in the currency. As regarding the dollar Canada, where we prefer to stand aside, but we suggest that tomorrow we will finally present you our strategy of trading in this kind of pair. We suggest to wait a little longer before taking any kind of position in them, in the dollar Canada. As regarding the dollar ruble slightly retreated from the lows registered during last couple of sessions, around 61.60. Overall, here, as you could see, we still trading above its underlying uptrend line, the uptrend line of 2018, and while doing so, we should remain positively oriented regarding the currency, regarding this pair. The same applies, by the way, for the euro ruble. Euro ruble still trading above its underlying bullish trend. Thank you very much, our dear subscribers. See you tomorrow with our new analysis.